What's up, guys? We are back with another Sunday prep video, and in today's video I want to break down a very simple trading setup, a technical setup that I continue to see on the market provide incredible opportunities. I don't want to waste any time and schmooze you with a fancy intro, so let's just jump right into it. So the setup that we're talking about today is a very simple one, and one that you have seen before or at least heard about, and that is an inverse head and shoulder. Now, at the core of it, what is an inverse head and shoulder? This is a bottoming formation. This is a formation that you will typically see when a stock or an equity moves lower, tries to find a bottom, and starts to work its way back up. Now, the reason why the inverse head and shoulder is so strong right now is because how bullish the market is. So every time we get any type of pullback on the market and it turns into a buying opportunity, you are going to see an inverse head and shoulder form at the low of that move. Now, what do we need to see an inverse head and shoulder? We need to see a left shoulder, something like this, which is your pullback, and then you need to see a second attempt that does dip below that first shoulder, right? So you have a left shoulder here. This is your left shoulder. This is a pullback on the market that moves back higher, fails to make a new high, which creates then fuels that next downside move. Now, once you get that next downside move, you're not looking to so much catch the bottom here, but what you're waiting for is for the market to come back up, fail to make a new high again. However, what you want to see this next time is a higher low. So this higher low right here is your right shoulder. Here is your head. Here is your left shoulder. Here is your right shoulder. You have your neckline, which is the high that failed to make a new high. Now, what you're looking for is for this to set up. You're looking for the left shoulder, you're looking for the head and the right shoulder, and you are targeting to either long on the right shoulder, which is the higher low, or you're looking for that break and retest above the neckline for the upside continuation. Now, you may think that this is super rudimentary and something that I'm just sort of making up, but I have two fantastic examples from just last week, one that I traded on both OKLO and Palantir that did exactly this and created an incredible long opportunity. Now, the reason why this is such a bullish formation is because right here below this left shoulder, this area right here below this left shoulder is where sellers get trapped, right? So they think that you're gonna break down this low and continue lower. This is where a lot of people start to get short. They get short underneath that left shoulder. Now, once you reclaim that left shoulder and turn it back into a support level, this is when all of these shorts down here get trapped, which fuels that upside move. Now, with how strong the market has been, when you start to see trapped sellers and you start to see that uptrend come in again, there is a frenzy of buying, and that bottoms the market, which has provided huge upside opportunity. So the thing that I want you to understand for the inverse head and shoulder is the larger the time frame, the more powerful it's going to be. So I love to look for this setup on an hourly chart. An hourly chart where the inverse head and shoulder takes a few days to take place. Not so much on a 2-minute chart where one candle is the left shoulder, the next candle is the head, and the next candle is the right shoulder. I'm not so interested in that very short-term inverse head and shoulder. I am looking for this on the hourly chart to develop over multiple days, to develop a strong trending move back to the upside that we can look for a multi-day runner or a big swing trade, right? That's really where this is very powerful. So this is exactly what happened on OKLO. This is a trade that I made around $7,700 on, about a 65% winner. This was last week, and I want to break down why I took this trade, what I saw on the charts, and how I actually executed my entry. So you guys can see right here, what we were just talking about was the inverse head and shoulder, and I can make this very clear for you. Here's your left shoulder, here is your head, and here is your right shoulder. So you can see that we had a consolidation area here, which broke down, and shorts tried to play this to the downside. Those shorts were likely executing entries down in this area down here. Once it got back above that 65 level, which was this previous left shoulder low, once we reclaimed that level and started to turn it back into support, you can see that we went ahead and formed that right shoulder. So you can see right here, this is our left shoulder, here is our head, and here is our right shoulder. So once we turn that left shoulder low back into a low here on the right shoulder, you can see what happened after we formulated that inverse head and shoulder, breaking out above that $70 neckline and creating a huge long opportunity. Now the neckline, as most of you probably know, is the high point here, which was 70 on OKLO. Once again, left shoulder, head, right shoulder. Your red line here is your neckline. Once you get a break above that neckline, look for our classic break and retest setup to initiate an entry. Now, if you want to get super aggressive, you can try to find where that right shoulder is forming, create a long entry at the low of that right shoulder, and trust that that is going to try to reclaim and hold, which would probably provide an even greater long opportunity. So for this trade in particular, I saw this larger time frame setup happening, and I waited for the break and retest of 70 on the intraday to take my entry. So you can see right here, if we go down to the 5-minute chart and we go back to that day right here, this was on Thursday of last week, we can see the break and retest of that neckline at 70, creating that long opportunity. This is on the intraday, which is the 5-minute chart. But I knew that this setup was viable when I zoomed out, and I knew how powerful it could be. Now I want to show you an identical chart on a different stock, and that, my friends, is on Palantir, a stock that all of you love to watch. And you can see right here, take a look at Palantir. Here's your left shoulder, here is your head, here is your right shoulder, and look at the result of this exact formation. These are identical charts, OKLO and Palantir, creating a left shoulder, head, and right shoulder, creating an inverse head and shoulder on both of these stocks, and the move that came after them is identical. An explosion up higher, creating a huge long opportunity on both of these stocks. It is so identical. And you are seeing this across the market. It's not just on these two stocks, and I'm going to share with you more examples in today's video if you stick around. Now, something I want to point out is that you don't need to take your entry point on the breakout day of that neckline. What you actually could look for is then a retest of that neckline on a larger term time frame, which is exactly what OKLO did on Friday. So you have your neckline here at $70, you squeeze above it, and you have a full day of upside. What you could then look for is our classic break and retest long entry, turning this previous high and this previous high back into a low, creating a break and retest long opportunity, which is exactly what OKLO did here on Friday. Now, if we go to Palantir, we can see we're still pending that retest, and this could be the next big opportunity. So what I'm going to be looking for on Palantir is for these highs at around $156, this high right here, here, and here, as well as here, to come back down and retest. And if we get that, I can look for that break and retest long off that major previous high. But the reason we're talking about the inverse head and shoulder today is because it's a bottoming formation, and it starts to show you where a bottom could be developing. You want to look for on a larger term time frame and start to try to find these across the market as long as we continue to stay in this very bullish uptrend. Now, you're likely here to look for some setups that haven't happened yet, and you want to take advantage of this inverse head and shoulder setup. So what I'm going to do is I'm going to provide for you some setups that are not yet breaking out, some inverse head and shoulder setups that look like they could be something to watch next week. And the first one for me is going to be ticker symbol ARM. This is a semiconductor stock, and I'm going to go ahead and break down this stock for you right now. What you can see here on ARM is a little bit of a sloppy inverse head and shoulder, but the key characteristics are here, and this is absolutely something that I'm going to be looking for next week. You guys can see right here, we have somewhat of that left shoulder forming right here on Monday of last week. We can see that we broke back below that level and started to stay under that level for a few trading days. Now, over the last 2 trading days of last week, we started to reclaim and turn that previous left shoulder low right here at around $160 back into support. So we have that left shoulder low right here around $160. That is right in this area here. Left shoulder low right here. We broke below it and started to turn it into a potential rejection point. We got back above it, and you can see that we reclaimed that $160 to $159 level. Now, you can see that we were able to maintain above that previous low both Thursday and Friday of last week, and you're starting to get that upside move coming in. Now, to me, the neckline looks to be right here at around $164.50. If we could break above that Monday high from last week and this Friday high from last week, I think you're going to see an explosive move here on ARM, and my target here is up into $168 and possibly higher. Now, we're going to zoom out to the 4-hour chart, and I'm going to show you exactly how this sets up. You can see above this high right here at $164, which would be that neckline for me. If we can get above that, I love this target up at 168, and a break above that would be a break of that major 4-hour high. And if I zoom out here on the daily chart, I really don't see much that's going to slow down ARM above that 168, maybe up at this 174 spot, maybe up at this 183 spot, but this could be a pretty serious breakout here on ARM behind a very strong semiconductor sector. If you can get above this high right here from back in May, late May, I'm thinking you're going to see a nice push here on ARM. Now, the only problem is, of course, we have earnings approaching on all of these stocks, so it could put a little bit of a question mark on the technical analysis, but for now, this looks incredible. I would be watching ARM next week over this 164.50 into this 168, and above that, you're sort of looking at blue skies, and so I'm going to be focused on this very closely. Now, the next one I want to watch next week is Netflix. Netflix has had a major pullback over the last few weeks to almost a month back into a major daily demand. You guys can see right here, previous highs on Netflix, turning into lows all of May into June, and you can see, take a look at what Netflix just did last week. We started to see it maintain above that 1160 level. Now, here's what's pretty interesting. If I go to the hourly chart, what do we potentially see forming here? We see a left shoulder, we see a head, and we see a right shoulder. And if we can continue to hold this left shoulder low right here like we did on Friday and start to build higher, right, I would be very interested to see if this is a inverse head and shoulder formation. Now, here is where a lot of people get this wrong. Technically, Netflix is still in a downtrend, and technically, this is not really that interesting of an entry point. What do we want to see to actually get the entry point? In my opinion, it's the break of the neckline. So we have our left shoulder, right? We have our low right here. We have our head, we have our right shoulder, and we have the neckline up at $1,200 per share. So what I would be looking for is not so much an entry down here on Netflix. I would be looking for Netflix to get back up, break and hold above this neckline at 1200 and create that inverse head and shoulder formation and solidify an entry above these lows, above these highs on a break and retest of 1200. This is a pullback long opportunity that I'm definitely going to be focused on into next week. Now, this next one is a little bit more speculative, but the technical setup is there, which makes me slightly interested. This is a company that is creating air taxis that just got some approvals in Dubai and is sort of a hot name right now. A little bit of a cheaper stock, a little bit more volatile, so I can't say for sure I trust this one 100%, but let me go ahead and show you guys the technical setup. What we can see here is a high around $18.50 and a low of around $16 to $17, creating, again, that left shoulder. You can see that we created this little break below that area, creating that head. You can see that we got back above this area and turned that previous low right here back into lows again at $16.50 to $17, creating what I would say here, inverse head and shoulder. And if you can get a break above this 1855 high, which is this high right here, I would absolutely look for continuation here. Now, the reason this one's so interesting is not just because it's creating this inverse head and shoulder, but where it's creating it off of. Let me show you what this $17 level is when we zoom out. Now, you probably guessed it, it's the all-time highs. You can see right here, the all-time high on this stock is $17 per share, and that is the exact level that you just created this inverse head and shoulder above. You tried to hold that previous all-time high 2 weeks ago, you failed below it, and you reclaimed it into end of week last week. And as long as you can stay above that previous all-time high, I think there's some interest to be long on a break and hold above that. So I would definitely go ahead and set some alerts above that $18.55 level. Look for JOBY to stay above that 17 all-time high and see if maybe this is a little bit of a small cap runner. That could be something to watch. Now, the next name that I want to talk about with the inverse head and shoulder is a name that you guys all love to trade, and that is NVDA. We know semis are hot, and we know this formation setting up. This is going to be interesting. NVIDIA, we can see here 170 to 171 was a previous consolidation range right here, creating once again that left shoulder. We had a breakdown and a fail below that level that created this head right here down into that key demand of around $164, down into that daily 20 SMA. What has NVIDIA done to close last week? It has reclaimed this area right here, once again creating that right shoulder. These lows here turning back into lows, putting everyone here under pressure, everyone that shorted down below 171 under pressure, turning this back into lows very, very clearly. We also have an extremely clear neckline at $174.50. And if you can get that break and hold above, I see this upside. This chart looks identical to our charts on Palantir, our charts on OKLO, and also the chart on AMD before it broke out. So you can see here on AMD, we have this, and I can clean this up a little bit for you just to really show you what happened here. Left shoulder, pull back, right? Right shoulder here. And what happened next? The break and retest of the neckline, which was 162. Look at the break and retest of that neckline right there, and look at the continuation that has happened. This is lagging on NVIDIA, and if we get that same setup to form right here, right here, right here, look for the break and retest of that 174.50, one of these, and one of those. That could be an incredible watch. So you guys can see, we are seeing this everywhere. This is the reason we're seeing this everywhere is because we just got a recent pullback on the market that has created a new buying opportunity. And as long as we're in this uptrending market, these are going to continue to set up, and it's something you should be able to be looking for. And it's something that you need to know what it looks like, and you need to know how to look for it, because these opportunities are showing up. Now, the last setup that I want to talk about with you guys is TTD. After we go over this one, we're going to look at the SMH, and then we're going to call it a video. Now, if you want to get analysis on the NASDAQ futures and the S&P 500 futures, you need to come to our pre-market live stream every single morning on YouTube, 100% free at 8 a.m. If you show up for that, we have live analysis on the futures, on the SPY, and the Qs. We're going to save that for the live stream because I want you guys to be there with that real-time analysis. So let's go ahead and take a look at Trade Desk. Trade Desk, a very interesting setup brewing here. We had an S&P 500 inclusion move right here on Trade Desk. This is similar to the inclusion move that I took on Datadog. We had a big push on Datadog, a pullback, and a swing trade that I have been in and took profits on last week. We'll make a video on this one. Comment down below if you want to see a video about this swing trade. It turned out to be a beauty. But let's go back to Trade Desk. Here on Trade Desk, we can see we had this big S&P 500 inclusion move to the upside, followed by a pullback. That pullback has continued to get bought up, and you can see just recently we are starting to hold above this $84 high. $84 high right here, and look at how that has turned into support both Thursday and Friday of last week. Now you see this big yellow line running across your screen. Let me show you what that is. If we go to the daily chart, look at the massive, and I mean massive gap that is above here on Trade Desk up to $117 per share. You can see that the last recorded level before 117 was back here on February 13th with a high of 85.18. Anything north of 85.18 has not been traded for over 5 months. The only thing in the way here, in my eyes, is the daily 200 SMA at $91.38. However, I still think there is opportunity to be watching here. You guys can see we have this high right here. We have these lows right here at 84. I now love giving 84 as my risk. If I can get long with a stop under 84, as long as TTD stays above that 84 level, I would be looking for this move through this high up into the daily 200 SMA and possibly even further to fill that gap. Now, 117 is a far, far move away. Could be possible, a little bit advantageous, but regardless, there is absolutely opportunity here. And I think you should be watching Trade Desk next week if we can hold above that $84 level. So the last thing we're going to look at today is the SMH, and I think you should be looking at the SMH every day because this is, quite honestly, the sector that's running the market. And we can see that the SMH did a fantastic job of reclaiming the daily 20 SMA both Thursday and Friday of last week at $285 per share. This is an interesting pullback long opportunity, similar to our inverse head and shoulder setup. A little bit sloppy, but you can sort of see it here. Look at the daily 20 SMA, which held price on Thursday, held price on Friday. And as long as we're holding above that daily 20 and this demand zone right here between 285 and 281, I am looking for the SMH to consolidate and start to create that move higher back towards those all-time highs at 293 and possibly even higher. Now, the last thing I want to warn you guys, with all of the setups that we talked about today, which look great on the technicals, is we do have a very heavy economic calendar and earnings week ahead of us. Next week, we do have some major events like GDP on Wednesday. We have FOMC on Wednesday. We have PCE on Thursday. We have some major stuff here on Friday as well. So you can see this is a very heavy red folder week for the economic calendar. And that could definitely throw some curveballs at us when it comes to trading technicals. As a technical trader, we always need to understand that macroeconomic data could mess up the technical setup, could sort of change the outlook, and something we need to understand when we put risk on the table. Now, with all of that said, I hope that this video was able to prepare you for some setups over the next coming week that I am very interested in. Again, also some warnings about some economic data. I hope you guys enjoyed it. If you did, press that like button, subscribe to the channel, and I will see you on the live stream tomorrow. Peace out.